Hey, what's up, everybody? This is Matt, and I'm chilling with who?
Ice. What's up, everybody?
Yeah, and the two of us make the Matt and Nice Show. Now, in today's video, we're going to talk about something we've been breaking down for the last few weeks, and that's the new America. And specifically in this video, home and car prices, man, they're getting out of hand. No. Yep. And we're going to start off with the infamous 50-year mortgage they've been floating around, right? So, Josh, run that clip.
To make home buying more affordable, President Trump floated this idea of a 50-year mortgage in a social media post. The purpose of a longer-term fixed-rate mortgage would be to lower the monthly payment for homeowners. The longer the term of the loan, the smaller the principal needed each month to pay it off in full. Using the latest median sale price of a home from September, $415,200, according to the realtors, and the current interest rate of about 6.3%, according to Mortgage News Daily. On a 30-year fixed loan with a 20% down payment, the monthly payment of just principal and interest would be $2,056. Now, if you raise the length to 50 years at the same interest rate, that payment would be $1,823, and that's a savings of $233 a month. Homeowners, however, wouldn't build equity as quickly, and that's because their principal payments would be smaller, and the amount of interest that they're paying to lenders would actually be 40%.
Man, what's your thoughts, Ice? What's your thoughts? You kind of started laughing, man.
A lot of tech to determine that was a lot.
Oh, man. You know what? Basically, the first thing that came through my mind was they trying to sign you up for debt subscriptions for life. Okay. Like they are saying, look, you going to be in debt for life. Save $200 a month. That's it. Okay. We not giving you nothing else. Don't expect anything else from us. You are going to be in debt to the day you die. Take this $200, go shove this up your butt and get out our face. That's what I'm hearing from that, bro.
Go take this $200 and buy another product.
Yeah, go buy another product. Get another debt subscription over there because you ain't getting out of debt. This is permanent, okay? You ain't getting out of debt. That's basically what I'm hearing, bro.
You know what? I'm happy you brought that up because when I watched, I said, you do a 50-year mortgage, you saving $200?
Yeah, $200. I mean, come on, man.
Stop it.
It's just crazy. And the way I think about it, man, I think about it like this because I work with people every single day who want to buy homes, people who want to have home ownership. Heck, I want to have home ownership. I want to buy a house. But you know the average house in San Diego, how much the average home in San Diego? I'm talking about a starter home, okay? I ain't talking about nothing like on the coast and somewhere off the beach. Bro, I'm talking about a starter home. Starter homes in San Diego is about $930. Very expensive.
Wow.
$930,000 for a starter home, like the average price, obviously. But basically what I'm saying is home ownership, I mean, it's almost going away. And I think that's a gimmick because Trump is very gimmicky. Like he always try to come up with gimmicks and scams and schemes. And I think the American people are looking like, okay, I'm basically buying two houses, basically I'm buying two houses. I'm getting buried in interest. And this is 50 years? Bro, that's like a prison sentence, bro. Like, I think people that go to jail for murder get off, they get out of jail before you get out of debt. You know what I'm saying? It's just crazy.
Well, you're right. Well, man, you're absolutely right. And I think that the thing that really comes to my mind is why are they doing this? There's only two reasons. I think one, it's probably a lot of people who are on the borderline who can't get approved that if they got a 50-year mortgage, that can be an uptick. I'll say three reasons. Second reason is obvious. There's a lot of people who can afford a bigger house. And the third reason is investors can gain up to 40% more money in just interest payments. And if you default, they get to start the process all over again. Yeah. All over again, man. And now, Harvard came out with a study and they said home prices are now 5 times the median income, bro. Nearing historic highs, bro. What do you have to say about that, man? That's bad news. What's your thoughts, Ice?
Yeah, I mean, basically, it's going to be hard for us to buy a home. Americans buckle up, buckle your seatbelt up, okay? Because basically it's going to get harder for you to buy a home. And all the other issues that you have going on, all the other issues that you're dealing with, now this is just another thing that's added to your plate, okay? Ain't that nice? Ain't that nice for our government? They not focused on home ownership, making it more affordable. They're not focused on cutting the cost of groceries. They're not focused on student loan relief. They're not focused on childcare. None of these things. We're focused on trying to hide the Epstein files. You know what I'm saying? Like, we are focused on the wrong things in this country. And I just hope we can get back to the main thing and keep the main thing, because again, I want to buy a home. Matt, I'm sure you want to buy a home. A lot of Americans want to buy a home. That's the American dream. And unfortunately, it's being snatched away from us because we got bad policies. We got investors coming in from not just what's it called? BlackRock? BlackRock. We have BlackRock, but also they are investors, also international investors. You have people from China, other places coming here, buying homes in the United States and jacking up the prices because these are rentals basically for these people. They don't care. It's just a portfolio in there, one of their assets in their portfolio. So I think we need to have basic sense, common sense policy around making sure home ownership is affordable, but also pushing investors out from being able to buy homes and compete with everyday people. I can't compete with a company that has like $20 billion in assets. And who's going to get that home? Not me.
No. And translation. So are you saying, Ice, that it's not the immigrants who are bringing these home prices up? It's these investors? Is that what you're saying, Ice?
Definitely. Yeah, absolutely. I mean, that's what they want to say. JD Vance, he could just dance Vance. He can say whatever he want to say, you know what I'm saying? But no, it's not no immigrant. You tell what immigrants you know from like and not obviously all immigrants come from different parts of the world, but a lot of them coming from Central America and things like that, the southern border or whatever. You mean tell me they can afford $600,000 homes? Come on, man. Like, I'm gonna have to call cap on that one.
No, man, I think you make all good points. I think even what you talked about the 50-year mortgage and how it pretty much sounds like a scam. And this kind of sounds like Trump, again, not actually doing the numbers. Like, he runs it out there. And then if you do the math, it's like, it doesn't really make sense. Now, I know another thing that people don't talk about when it comes to buying a home is, and I know, Ice, I know you talked about this too, because I know you're big on financial literacy, is actually the home repair costs. It's not just the price of the mortgage. It's not just the price of, it's also home repair costs, man. So what are your thoughts on this, man? Rising repair costs are making home affordable, even homes more unaffordable.
Yeah, another debt subscription, right? Because now you have to borrow money and probably borrow money from the equity in your home to fix the kitchen or something like that. And trust me, like, these things are expensive. Like, I have firsthand knowledge on this. I have people that I know personally who own homes. They have a home and they tell me like, man, it's gonna cost me $10,000 to just glaze the bathroom, and then I got to get this remodel, and I got this pipe that's broken. And I'm like, dang, man, it costs a lot to be a homeowner. And it's almost like, man, is it even worth it at this point? Like, they trying to bury you with 50-year mortgages. Then they trying to make it more costly to even get repairs done on your home. So basically what I'm hearing from all this, the takeaway is that you're going to be in debt for the rest of your life. You better suck it up, Buttercup, take this debt and shove it straight up your candy. You know what?
No, you're right. And there's another thing that's been happening, man. Josh, add that clip, Josh. We're going to run that clip right now, Ice, and I wanted to discuss. I really want to hear your input. So let's run the clip, Josh.
4% of newly built single-family homes sold in 2022 belong to what's called a homeowners association, which are organizations that oversee properties in a community.
Certain local governments require almost all new construction to have an HOA.
They're rooted in the desire for municipalities to offload their responsibilities for taking care of things that you would normally associate with paying your taxes.
Homeowners associations provide value to owners.
But there's been a backlash to HOAs because of some homeowners' negative experiences.
Now, I wanted to bring that up because you have the rising cost of homes, rising repair costs. Obviously, insurance is getting higher and higher and higher. But that video said 84% of new home construction has HOA fees. And you heard what the guy said. It's because municipalities are offsetting the cost of taxes. So the HOA fee is going to cover ground clearance, snow removal, stuff that the city typically does. So it's a way to pass on that tax on to you. So it's another way in which they keep gutting, boom, 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 like Tom Brady say, bro. I want to hear your thoughts on that.
Well,
Translation.
Let's hear the translation on that. You know what? You know when you go to the grocery store, Matt, listener, you go to the grocery store and you see the cashiers, and then you have the self-checkout aisle. I feel like America's turning into like the self-checkout aisle. Like pretty much you got to buy the groceries, you got to put them in your grocery cart, and you got to bring out their own groceries. So basically, pretty much you have to pay for everything. And we not helping you with nothing. You got to self-do this, self-do that, self-do this. And homeowners association, HOA fees, nobody likes them. Nobody likes them because nobody really know what's in those HOA fees and all the rules and the regulations and the bylaws. Like I understand it in concept and theory. Like, okay, we want to keep the grounds good. We want to make sure we get the snow removal and trash pickup. It sounds good. But I need to know why them fees keep jacking up because they only do what? They only go one way, and that is up.
Up? Yeah. No, I said, I know you're a big component of this. So I just want to have a question for you. I know we don't really get into huge solutions and all this stuff, but what would you say to somebody who's trying to buy a home in this economy right now?
Well, I would say first and foremost, do control the controllables. Well, what I mean by control the controllables, first things first, get your debt under control. Pay down as much as you can. What's called DTI, debt to income. That is one of the key factors in determining if you're going to get approved for a home. So pay down that credit card debt, pay down those student loans, those personal loans, all those loans that you have. Get your debt down as low as possible. That's one. Two, increase your credit score. You always can do better. Get your credit score increased. There's so many easy ways to increase your credit score. Just pay on time. Keep your credit card balances low. Pay them off in full every month. Don't stop borrowing money, okay? Just stop borrowing money right now, okay? Don't borrow no more money. Don't apply for nothing right now. Freeze frame your finances. Freeze frame it. That's what you can do. Also, save as much money as you possibly can. Cut back on certain things like subscriptions, getting your nails done, going to getting Uber Eats or whatever the case may be. Cut back as much as you can. Save some of that money. And then unfortunately, you're just going to have to play the waiting game a little bit because right now these interest rates are still high and we want to wait till interest rates go below 6% because, basically a $400,000 house 5 years ago, your payment probably would have been, I don't know, $1,500, $1,600 or something like that. With today's interest rates, it's going to be like almost close to like $3,000, right? Or a little bit under $3,000. So it's just unaffordable for a lot of people to buy homes right now. But if you can, again, I would just pay down as much debt as you possibly can because that's going to be your key to keeping your debt to income ratio down and also save as much as you can.
No, I think that's actually really good advice, man. Because I'm in the process looking for something, and I'm actually considering buying a little bit less of a house than I was before. And I've had to watch out for those finesse and flip type guys, bro. You know what I'm saying? I think we've come across those guys, those finesse and flippers. You know what I'm saying? And they add their fees on top all the time. So you got to be real careful with those guys, man.
Yeah. Alert.
yeah, bro. They be nice to you, like, hey, how you doing? You know what I'm saying? You be like, they added a few extra basis points on the interest and all kind of little slimy stuff. Now,
oh yeah,
I want to transition, bro. So, I go down to the auto show. I'm excited, man. I'm like, man, I'm about to go to the auto show.
Oh, you went to the auto show?
Man, I went to the auto show, man, here in Detroit. It's not as big as it used to be, but I decided to go to the auto show, man. So I go into the auto show, man. I'm jamming, bro. I'm walking in, seeing people I know, and then I go, and then I'm like, man, I'm looking at the cars. I'm excited to see the cars because I'm a car person. Ice knows that about me, and I'm possibly cross shopping. So I go, man. And let's just look at one of the first cars I was looking at, man. Let's run that clip. I think it's gonna start at 89,000. Yeah, 650 horsepower, 600 pounds. So people who don't know, this is the Ram 650. It's their street truck, right? But you heard that price, man. What was that price, Ice? At the beginning, $89,000, bro.
Whew, man.
Stop
You
it.
know what I'm saying?
89,000?
89,000 for this street truck, bro. Listen, let me play it one more time. I think it's gonna start at 89,000. Yeah, 650 horsepower, 600 pounds. What's your reaction to an 89,000 Ram truck, bro?
Man, I'm like, like really? Wow, bro.
Not the stone cold. That was my response, bro. When I looked, hey, play it again.
Yeah. That's what I was looking at. I'm like, what? I can't believe that. Like $89,000 for that? Bro, we looking at luxury prices. That's like we're at luxury territory for regular things. And this is what the new America is. The new America is what used to be premium is now standard. It's just standard now,
Yep.
but they got premium prices. Ain't that nice? That's really nice that they slap premium on things. And at the same time, this stuff is just like really rinky-dink stuff. So I feel bad for people who like those trucks because, you know, you can't watch an NFL game nowadays without seeing those trucks and they want to tell you, you can lease this for just $289 a month. And then, you some schmuck on a chair. You just sitting there like, okay, all right. And then they hit you up with DraftKings and then these chicken wings from Wingstop. They just trying to like inundate you with ads and just destroy your life. And then you see a car like that or a truck. I mean, you can't afford it. That's why they got all these creative financing things. Like they want to finance it in such a creative way that you like, man, you know what? I'm just going to be in debt for life. And bro, I kid you not. I tell you not. Listener, Matt, I had a client the other day and I felt really bad for this client because this client literally told me, she came in and was like, I'm never going to be out of debt. I'm going to just make life with it. I'm going to just make my life what it is. I'm going to rack up Afterpay and Klarna. I'm going to just rack up buy now, pay later. I'm going to run up my credit card and I'm going to pay them payments for the rest of my life. That's just going to be my life. And I said, you know what? Freedom is worth fighting for. Freedom is worth fighting for because when you're free as a human, I believe that's how God created right to be free. And when you're free, then you have more creativity, you have a better life, less stress. And I feel like Americans, we got so much financial stress, so much issues are going on with us right now that we don't even have time to breathe. And we're at the point now where we're just getting buried with debt. And now this truck, $89,000, that's insane.
Yeah, and I think it's a failure of politics, right? To let this stuff get this out of hand. And that's not even the worst part, bro. So if you're really into trucks, you kind of know about the Ram TRX. So they discontinued it when Stellantis kind of came in. No, Stellantis came in, but they bringing it back. So they brought Tim Comiskis, who used to be the CEO of Dodge. Now he's CEO of Ram. So Ram is supposed to have all these new trucks, powerful trucks. So let me run the clip of this other truck that I was looking at. So I'm like, okay, let me go to TRX, right? I already saw the ads. And to your point, one of those ads are on TV, man. I think it's my man that used to be on. What's my man's name that used to be on Everybody Hates Chris, the father?
Oh, Terry Crews.
Terry Crews on there, man. Every time bro, I be having to mute it. We like, man, why is this dude on here, bro? It'd be so corny. But let's run the clip. Run the clip, Josh. Fake premium, man, bro. I want you to play a game with me, bro. I want you to guess the price of this. So let's play the Jeopardy music. You get 2 guesses, bro. No, you get 2 guesses. Okay. And if you're within like $1,000 of it, you win. So let's go.
How much?
I want you to guess it. I want you to guess it.
Okay.
And if you're within $1,000, you win. So let's go.
All right, let's go.
What's your first guess, bro?
I'm gonna say 75,000. All right, do I get a lifeline?
Yeah, one more time, bro.
Okay. All right. I'm gonna say 110.
You're in the area. I'm gonna say this. So I'll go up to the guy. And I saw the ads, right? And I said, man, I've seen this car before. And I said, I think it's 102. And bro, I kid you not. The guy was
Wait,
like,
what'd you say?
no, it's 102,000.
That's crazy.
But bro, listen to this. He's like, but we just marked it down. It's now 99,000. Hit that stone cold, bro. He's like, what? Yeah. I was like, ain't no damn difference, bro. That's the same damn price. $99,000. I said, I'm gonna keep my truck, bro. $99,000 for a truck that when it first came out was going for maybe 65 to 70,000 brand new. That came out maybe 2018.
That's wild.
$100,000, bro.
Crazy. Wow.
That's where we are.
Why the price? I know besides greed, how did the price, like, to your point, how did the government allow this to happen?
I really don't know. I mean, like, you hear two different things. I mean, car companies say that, hey, the price of having to invest in EV, the price of having all the technologies and things like that. I think it's just greed. I think that's some of it, but I think it's greed, corporate greed, dealership greed. Because I mean, some of these cars, when they come out, they're gonna be marked up, bro, by $20,000, $30,000. So I think it's just greed, and it's uncontrolled, bro.
Yeah, I mean, that's crazy. I mean, I thought about it. Like, my first car I had, I mean, it was a hoopty, it was a jalopy.
Oh, I remember that. I remember that, man.
Yeah, you remember that, bro? It was like $2,000, bro. I was cool with that car. You know what I'm saying? It got me from point A to B. I wasn't tripping. And on top of that, I still have, because I believe in keeping cars for at least 6 years. So the car I have now, I have a Prius, and I love my Prius. Okay, great on gas. Low maintenance. I love it. It's paid for. It's been paid for 10 plus years. And you know what? I went to the dealership that other day to get like a oil change or, just kind of, maintenance check, whatever. And I went up there and the guy was like, your oil change is going to be $89. I said, $89? It used to be $45. It was $45 literally 6 months ago. Okay. It was $45 and it's pretty much doubled now at this point. And I was just like, why the double? He was like, I don't know. That's just what it is now. And I'm like, dang, man, well, this is where we at right now, where now they just jacking the prices up, Matt, because they can. Okay. They can just do it. And what you going to do about it? You know what I'm saying? It's like, what can you do about it?
Nothing, bro. And I'm gonna run this clip. Josh run this clip, and it kind of highlights the rising cost of car notes, car payments, and just cars in general. So run that clip, Josh.
$300 monthly car payment, virtually a thing of the past. Car shoppers are stretching the length of the loan as long as they can to afford new car prices reaching a record $50,000 on average. The typical new car payment topping $750 this year, with loans typically stretching 84 months and even longer.
Cars are costing more. Some of that is tariffs and supply chain issues. Some of that's all the technology that's built into cars now. Like, even replacing a side view mirror can be a lot more expensive than it used to be because of all the lane assist technology and the cameras.
Of course, stretching out these loans adds thousands of dollars of interest to the ultimate cost of the car. And for some drivers who want to trade in the vehicle before the loan is paid, they could find themselves underwater on the car, meaning they still owe more than it's worth.
Maybe you save $100 or $200 a month, but you end up paying $5,000 or $6,000 or $7,000 more over the life of the loan.
So what should you aim for?
It's generally recommended to finance no longer than about 4 years for a used car or about 5 years for a new car.
Experts say when considering a purchase, also remember that insurance rates have risen as well, and car repairs and labor are also more expensive too. It might make more sense to drive that old car for another year.
Bro, what's your thoughts, man? That ended was funny, bro. Don't forget, car prices went up too, and your daughter needs new shoes. And I
was thinking the same thing.
I was thinking about this morning.
I was thinking the same thing, bro. I'm like, I can't believe how insensitive America has become. it's like, oh, don't forget your insurance as well. Your insurance is increased too. And I like how they just glaze over tariffs, right? They say, oh, well, you know what? Yeah, the reason why cars are increasing is because tariffs. But then it's the technology in the car. They kind of whisper, tariffs. It was tariffs. Oh, come on, man. Like, this is unforced errors. It's just unforced errors. And I get it that, you want to make a profit as a company and things like that. I get that. But when CEOs are getting paid almost 1,000% more than the average factory worker or their own workers, something's broken in this country. And you just can't keep putting on the backs of the American people. Now, I go back to what I just said previously. You can't just have a self-checkout aisle on Americans' backs. Like, well, you're going to have to put it in the cart. You're going to have to check it out. We're not doing nothing for you. And it's just not sustainable.
No, and I have a question for you too, Ice. Overall, what do you think is the worst thing? Like, I mean, obviously, you got the rise in prices. You talked about how insensitive people are to the American plight when it comes to prices. What do you think is the worst thing that you see?
Yeah, I think the worst thing I see is that nobody cares. Nobody cares. Okay, nobody cares. It's the insensitive nature of our country. Is indifference. Like I always say, I'd rather have people hate me, or I'd rather have you love me. But to be indifferent towards me, like you literally see me and it's like nobody cares. Nobody's listening to you. Your problems are your problems. They're going to make it about you and your problems individually and say you were a failure. You couldn't hack it in America. That's your fault. It's not our fault. And that's what really gets me, right? It's this sense of like everybody got to pull themselves up by the bootstraps, and meritocracy is all about meritocracy. You heard it on the right say meritocracy and things like that. But to be honest with you, the system is rigged. It is rigged against the everyday American. And there's no way you really can get out unless we all come together, right? Republican, Democrat, not MAGA. MAGA crazy. We don't want to work with them. But everybody else, we can come together and try to fix this country and at least say, you know what? Here's some rules to the game. One, affordability. Everybody should be able to have a home, a decent car, be able to have a good job where they can retire with some benefits, have health insurance, and not be loaded in debt, right? Can we just get to that point? But now we can't even get to that point right now because we just focus on democracy right now and just Trump just stealing elections and stuff. So, but that's what we need to get back to, politics that are really about affordability and what that looks like.
And I know for myself, man, to kind of close it out, one thing I'm gonna do, I'm opting out. I really wanted one of those type of trucks. I'm not buying it, bro. I might end up with a little Honda Civic Type R, which is, I think about going between 40 or 50,000. I'll do something like that. Even that's high. I know it's more expensive, but it's better than paying $102,000 for a truck. And I get Honda reliability, bro. I'm opting out of some of these cars that I really, really wanted, bro. I really like that Ram 650, bro, but not for $89,000. Not for a small home in Cleveland, Ohio, bro.
Hey, shout out to you, man.
I'm opting out, bro. I was so excited to go down to the auto show, man. I get down there, I'm like, I've hit that stone cold face, bro. What? Man, I was like, man, I can't believe I paid to get disrespected. I have to pay to go. I have to pay to hear. I have to pay $100,000, bro. I'm out. I'm opting out.
Self-checkout.
So hopefully you like this video. And like I said, I know we talk a lot of junk through a lot of our videos, but there's real serious stuff that we talk about. We obviously want to talk about home and car prices. And if you didn't really get what we were saying overall, just remember these 10 points. You can opt out of this stuff. You can opt out. You can buy a smaller home. Like I said, man, get your debt down, all these different things, man, because the new America, like you said, Ice, nobody cares.
Nobody cares. It's harsh.
No, but we care over here at Matt Knight Show. I know we talk a lot of junk. We care, man, and we want to see you win.
Yeah.
And all we ask in return, we're not sending you an email telling you to like pay us. We're not doing that, right? We're not demanding that you believe everything that we believe. We just want you to do 3 things, man. Share, like, and what else, bro? Subscribe.
Subscribe.
Take care, everybody.